go live for you guys, live Q&A, Wise Wealth Wednesdays. Hopefully it's coming through okay. I apologize for my voice right now, a cold, and my sinuses and my throat have been beat up quite a bit by this cold. So I'm gonna push through, not feeling 100% today, not feeling my best, but I'm on for everyone. I got to make sure that I do my Wise Wealth Wednesdays. Consistency is key, and every single Wednesday, without a doubt, you can guarantee that I will be on to answer live Q&A or to talk about whatever I've been up to and just share with you guys and share the knowledge, right? Because that's what it's all about. I'm on, just getting on. We're apologize for being a few minutes late. Like I say, I'm battled. Hey Noel, how you doing? Battling though, string through. You guys can probably hear that in my voice. It's been a tough. Hey, happy Wednesday to yourself as well. Muslim through. I was napping earlier today. Day. It's brutal. When you guys remember the last time you were sick, just think back to the last time you were sick. Remember how important your health is. And, I often myself will push beyond the, hey, Jason, how you doing? Thanks. Yeah, the nasty summer cold. I got the man cold, guys. And the man cold is a way worse version than the female cold. I don't know if that's a fact, but I always hear that. So I'm battling the man cold, and it's the middle of summer, 30 degrees outside. So that's tough. But talking about health and the important Nicholas. Sorry, guys. Sorry. We are talking today, and then we're going to talk about real estate. And while I'm talking about health, I'm going to talk about health podcast that I was on last week, it came out last week, which was really cool. So check that out. So we had a great hour-long conversation. It was fantastic. Check that out if you guys are interested. But talking about in that one about financial independence and some of the decisions that I made that got me to where I am today, and some of the regrets that I had, because he talks about like the importance of your health. Get that, man. Yeah, I mean, Buckley's would be. I try to go like as much natural as I can bad, and I save the drugs for like when I'm really bad. So I'm on nothing natural, ginger and garlic and that sort of thing to kind of recover. But talking about, your our wealth, and that's why I'm here tonight is to talk to people about how to grow their wealth. But your health is one of your greatest assets you actually have. When you're really sick, like if you got cancer, you would give up almost everything you have to cure that. Or if you had a really close family member or a terminal illness, I can guarantee you give up all your wealth for health. Nothing doesn't mean anything without health. Now, does by health. If you look at the data, the longer you tend to live. If you're really, really poor, you tend not to live as long. And as the way science is advancing today, we know that you can grow organs, that we have now stem cell research that will allow for the implementation of basically regrowing your skin, anything. So I do believe that wealth can equal better health because you can afford better nutrition, better exercise, all kind of stuff, right? So definitely wealth and health are connected, but when your health is feeling down, you just got to really focus on, building that back up. So today, we're not going to go for a super long session. We're going to go and try to get a lot done in a shorter time so I can just rest in front of the TV. I know I'm not a big fan of the the TV, just watching it all day, but when you're sick, you just got to take care of yourself. And so, hey everyone, I love that. Max says health is wealth. Get some veggies and green juice. That's right. You got to juice up. Gotta have that kale. Have all those things. When we're talking about health, I was watching a documentary about the ketogenic diet. I'm kind of curious if anyone's explored that. I know we're not into the real estate Q&A yet, and I know that's why you guys are all here. But I'm kind of curious. Just before we start the first 5 minutes, I just kind of like to shoot the crap. What do you guys think about the ketogenic diet? Do you guys think that it's actually a good quality diet to take on? So the ketogenic diet, if you guys don't know, tends to be low sugar, low carbs, protein, a lot of high protein, and some fat. So I'm looking at maybe experimenting with that diet, which allows you to go through the process of ketosis, which is a different way that fuels your cells than using glucose, which would be sugar and carbs. So a different way to fuel your cells. Something I'm interested in, I'm kind of experimenting with, and I don't want to waste the whole session talking about it, but I was curious if people had feedback on that. I'm going to do a little experiment on myself and see how I feel, how my mental clarity is, if I'm able to boost my immune system by switching to the ketogenic diet. So I hear really good things. We know refined sugars are really, really bad. So it's a diet that doesn't focus on refined sugars. And we know products that are really, really created with a lot of processed oils like canola oil and all the bad oil, vegetable oils you don't want to use. You want to use like olive oil and like coconut oil, right? Using the stuff that's all really processed. Processed foods are not good for your body. Like we weren't designed to eat this kind of food. It's not like the natural, way of things. That's something I'm kind of exploring and am interested in anyway. So be curious to hear what people who have experimented with that think. This is more of an open dialogue, so share if you have any feedback on that. Okay, let me know when you're ready to bombard you with questions. Jason, okay, the question and answer time, just let the questions come. That's cool, that's cool. I'm ready for them. I'm here for you guys, let's bring it on. Is the other thing I didn't do is do a sound check. Are we okay? Are we okay with the sound? Should I reposition this? Is it better if I hold it? Anything feedback that way?
I think it's fine if you have.
Okay.
I don't have my headphones, so I can't really test it.
No worries. Okay, someone will tell me if the sound is really bad. Let me know if it is. We got all the regulars on here. BR Bo, is everyone getting proper audio? So maybe the audio is cutting out a little bit. I am on Wi-Fi, so it's possible that my Wi-Fi is, acting up a little bit. It's a little spotty. You could blame Rogers for that. That's my internet provider. Quick question. With the real estate calculator Excel file you gave, did it include cap, example vacancy rate, and other minor calculations determined, things calculated to determine if it's a buy? So there is a spot where you can put the vacancy rate in. In my market right now, there's almost no vacancy. It's like 1%. So I typically haven't been throwing it in there because I think good managers don't have vacancy. Honestly, a really, really good manager will have tenants lined up before you get to that point, right? Usually tenants give you 60 days, 90 days. How can you not have a tenant lined up? There's a huge demand for tenants right now and renters. So, I just put an ad out and like that, I got 30 applications. There was a time where I used to put 5 and 8% vacancy into my Excel. So that was something that I did factor in, and it is on my spreadsheet. You can see it there. You just have to input it. You have to add it into your cap rate calc because there is a place where I call out the vacancy rate. Sorry, guys. Yeah, definitely something to consider. Obviously, your vacancy rate is really important, and the cap rate is on there for sure. There's like a gross cap and a net cap rate I kind of like to use. The 1% rule is kind of like your gross cap rate in a lot of ways. You look at a property, it's like 250,000, 300,000. If it can rent for $3,000 a month, you're like, okay, cool. Guaranteed now I know that I'm going to be in like a 1% rule would be, I guess, 12 gross cap rate, right? Before any expenses, gross being top line, before we get into any expenses. And so that's obviously a good benchmark that I use before I need to calculate net, because most properties have a similar net, but some properties have worse insulation or certain factors like a different type of furnace or hot water heater or things like that that cause it to be a lot higher on the utility side. Most of my properties operate on the same level of efficiency because I put in LED light bulbs. So that's something cool to take advantage of. Confused about how to explain. Okay, let's hear what people have to say. Hear a lot of people talking about it. Ketogenic diet is cool. I've been off and on for a year now. Cool. Yeah, I hear good things from people who are using it. Not as much protein as you think, mostly fat. Yeah, for there's two variations of there's like the nutritionist version of the ketogenic diet, and then the ketogenic diet that's focused on fat. There's sort of two versions that I was looking into. I don't know. I have to do more research on that. Not my expertise area. More just kind of curious about how to optimize my health so I can live a long time and enjoy the wealth and the things that I've created. Cool. So yeah, I definitely. And everything you do, no matter what new thing you're taking on, new real estate strategy, I always recommend experimentation. Dip your feet in, test it out, see how you like it, see how it fits with your investment strategy or your investment philosophy or anything like that. And then sort of if you do find that you're able to really get a lot of value from it, then jump in and effectively take that and go all the way to the wall, because that's what I've been able to always do is take something that I develop a lot of skill set or expertise in, and then exploit the hell out of that and do that really, really well. That one thing that you have that no one else has, that competitive advantage I always talk about. Okay, so let's have some more questions here, guys. Scrolling up. Okay. G1 Mercury, how you doing, man? Saying that you got the sound okay, everything's okay. Sound issues might be the internet here at the moment. It seems to be a bit slow. Yeah, I don't know if the internet's maybe, we're on Wi-Fi, so that could be part of the issue. I'm gonna be resolving that soon where I have a direct link. Right now the internet's in the basement, so we're up here on the main floor. Coming in August, I have another dedicated line we're gonna get up here, so that'll fix some of the issues. I apologize if it is, cutting in and out. Hopefully you guys can hear me. Hopefully it's okay. If not, the show must go on, so I'll just keep going. Yeah, so he's saying sounds good, but choppy. How do you find contractors? Do you manage all the trades working on the property without general contractors? So I honestly don't have any really good general contractors right now. On one project, I have a really good trades guy who he can do pretty much everything, so I rely on him pretty heavily on one of the properties. Another property, I do have to manage the subs, and it is a bit of an issue. I mean, I basically am acting as GC on a lot of my jobs, and so I'm the general contractor, and so I bring in the sub, I pay the sub, I manage their work, I check their quality, I make sure that the other sub's done before the next sub so they can start, and then the next two are lined up. It's a real job doing that, but you can save a ton of money. Like a lot of GCs just stand around, do a very little bit of amount of management, maybe an hour a day or an hour or two a day, and they're billing you like huge amounts, right? And yeah, I mean, I guess a really good general contractor would be worth their weight and worth their money you'd be paying them. They say they're worth their weight in gold, but I haven't honestly found that. I've just found that when I had a general contractor come in and quote a job, he'd do a basement and I had like three really good ones in town. They were reputable, insured, like super able to deliver on timelines and all of this. And they'd come in a basement renovation and say $45,000. And I'd be like, wow. And the next guy come in and say $40,000. Next guy come in and be like, I can do it for like 39. That's like the lowest. And then I would go and do it not do it myself, but I would hire all the sub trades. I would hire a guy to frame it, hire a guy to insulate it, hire a guy to drywall it, board it. Then I'd hire a guy to tape and mud it, so doing all the corner bead and mudding it. Then I'd hire a guy to paint it. I'd hire someone to lay all the floors and the trim work. Then I would hire someone to do the cabinetry and stuff like that, whatever's left over, and miscellaneous tasks. And I'd be done and I'd be like 18,000 or 19,000, materials, everything in. And I'm like, wait, so they're at 40,000 for materials and labor. Does that mean that either their trades are really expensive, so they have bad trades, or good trades that are really expensive? Or it means they're jacking up their material cost on me, or it means they're taking a huge amount of that money for themselves as a general contractor. And I'm a really frugal guy, and so I'm like, hey, I can do this. Being a general contractor is not that hard. Although, like in my first few projects, it was a really difficult experience because the border won't be finished when you told the taper you'd be ready, and they're not, and then they're on another job, and you can't get them back. And I run into a lot of issues managing trades, and it is an issue to manage your borders, your tapers, your painters, your flooring installers, your general carpenters. You got concrete guys for foundations. There's a whole bunch of different, your plumbers, your electricians, all of that, right? There are tons of different trades you have to manage. And I guess if you have them all on speed dial, you can save yourself a ton of money. And so I recommend, especially when you're starting out small, I'm getting to a point now where I'm big enough that I could almost replace myself with a general contractor on the site. But yeah, I guess in the beginning, really I do recommend you to manage your own sub-trades. Really, really important to saving a ton of money because the market will value that renovation at like even 10 or 20% more than the general contractor is charging you. So if you're just getting in like the most expensive guys, you're not making that margin on the renovation. So if it costs you 50 to renovate, the market values that renovation at 52, you've made nothing through that renovation. You've just unlocked maybe more cash flow for yourself. And not that there's anything wrong with that. It's just, why wouldn't you get it done for 20 if you can, if you could find a guy who'll do that. So I'm a big proponent of like the handyman, and I'll bring in like my electrician, my plumber, maybe like a few other things, and I'll have one guy that can do most everything. That's been a really good one for me. But yeah, just managing the sub trades, it can be difficult, guys. I'm not going to say it's easy because if it was easy, everyone would be doing it and everyone would be making money hand over fist and everyone would be a real estate millionaire in their 20s. So it definitely takes some skill and it's doable though. Like anyone can do it. You just have to spend the time to learn and to study it and really get in the trenches and do it. Sorry, guys. I watched all your videos and you mentioned Dogs of Dow method. Can I use Questrade for that? Hey, Jason, you've watched all my videos. That is fantastic. Not many people have watched all of my videos probably. By the way, we need to get the watch time up so I can get this channel monetized so that YouTube will actually promote my videos. I do want to let you guys know I have a vlog style video coming out in the next couple of days when I'm better to edit it. I'm releasing a course. It's going to be a free course, the 30-day financial transformation. And I'm going to do a video each and every day. It's going to be topics on a whole bunch of cool areas. One of them, actually two of the videos are going to be investment philosophy. So developing your investment philosophy, investment strategy. So leveraging some of the things you're good at. And in that, I'll talk about the dogs of Dow strategy, the dogs of TSX. Like there are several different strategies you can use. The dividend style strategy. There are a lot of different stock investing strategies you can use. The dogs of Dow, at a high level, is really you can get a list and look at the yields of different companies and the highest yield. So the companies that have been beat up the most on price on that index, likely they haven't adjusted their dividend. So their yield would be really, really high. So you have a yield of like 8 or 9%. That can be a signal that the stock is undervalued because the yield is very strong in the stock. And so the idea is that you buy the stock and there'd be one, you're getting a really solid yield. You're buying at like 7 or 8% yield. And so there are a lot of companies on the TSX or the Dow that you can find, right, where they're like the dogs. The guys have been beat up and thrown to the rug, or they've had a bad year, like oil. A lot of the oil stocks were dogs on the indexes. So that's something you can look at. That strategy tends to, on average, outperform the S&P 500 and the TSX. So if you were to just buy dogs and readjust your portfolio every year to the new dogs and rebalance, you would actually outperform the index, historically speaking. So it's a really easy strategy where you buy like 10 or 15 stocks and you build your own portfolio. It is a bit more complex than buying ETFs. That's why I'm a big proponent of a lot of the noobs, like people who aren't doing this all day long, reading about the stocks. You have to do a lot of analysis more than just, when you get that list of 30 dogs, you got to go and analyze all those stocks and pick the best ones. If you don't have that skill set or that interest or the time to do that, just buy ETFs. You'll do really well. So yeah, that's sort of my thought on that, And yes, you can use Questrade. You could use Interactive Brokers. There are a lot of different brokerages you can use. Interactive and Questrade have lower fees per trade. That you can buy ETFs for free. Your buy and sells like $4.99 a trade, depending on how active you are. I think Interactive Brokers is a flat fee and 99 cents a buy, 99 cents a sell. So per time you buy and sell lots of shares. So that's the most cheapest option for self-directed options, right? That's definitely something you can explore. I wouldn't go through honestly, going through the banks, you're gonna pay like that $20 trading fee. I know they got their trading fees down with Scotia, McLeod, and TD. All the big banks have gotten down to like $9.99 trades, but still that's double the price. If you're doing a lot of trading, then that can cost you a bit of money. So something to think about. If you're gonna be trading stock yourself, then get your own DIY brokerage account. Do it yourself. Rather than paying someone to execute the trades for you. It's really easy. Just type in the ticker symbol, how many you want, put it in an order. There's a bid and an ask. I could do a whole video on that. Probably should. Okay. Jason says, we have a pre-approval for our new house closing February 2019. Am I stuck to apply for another mortgage? How do you mean? How can you have a pre-approval for February 2019? Usually rate holds are 60, 30, 60, 90, or 120 days. 120 days being the gold standard, where they'll hold a rate for you. So if it's a fixed rate, typically they'll approve you. So your mortgage rate is 2.99. They can't guarantee that till February 2019. That's crazy. I don't know if what kind of approval that is. I know that some banks will do quick analysis on you, or some mortgage brokers will do a quick analysis and say, oh, well, it's very likely you'll get approved, or as you are right now, you'll get approved. Or, under these situations, if you keep your income like this and you make these small tweaks, it's very likely you'll get approved. And they always err on this out of optimism because they want you to come back to them with the deal. So they'll say you're going to get approved, and then the deal comes to them in their lap, they'll decline you. So that's something to kind of think about there with, mortgage lending. Because I've never been able to lock up. I mean, maybe it's possible. Maybe you can get a rate hold that long. I don't know. And you get approval, maybe pre-approval or something. And then when it comes down, they have to actually approve you for the deal, in which case they could decline you. But at least you're pre-approved and you're pretty safe. I recommend all my investors that come in London and want to invest with me, I tell them you guys should always have your pre-approval in place. Like, make sure if you're going to use financing to buy this property, you're not going to use HELOC or cash, make sure you have that financing figured out before I go and offer no conditions on a property. Because once I do that, then the deal, we're kind of stuck on this deal. So you got to be ready to close and have a backup. I personally have always been able to find a way to close on every deal, whether I had to borrow cash from someone or refinance a couple other properties to make it happen, and then refinance that property. Or I honestly, I applied back in the day for like 5 mortgages at once. I go to BMO, TD, all my 3 different brokerages and a credit union, and I try everywhere. And one of them always says yes, right? So you try a different strategy. Maybe you screw up the way that you position the narrative of the property to the first the first lender and they bring up a red flag like, oh, we don't like that about the property. The next time you pitch it to the next lender, you don't quite mention that certain thing and you come at it with a different angle, a different strategy, because there's always a strategy and a way to get a yes. You just have to know how to come about it to get that yes. Maybe the interest rate isn't going to be favorable if your credit score is bad and you don't have good income and all that kind of stuff. Then the yes that you're going to get is not going to be one you want, but someone's going to give you a yes. Like out there, there's guaranteed a B lender or a C lender out there. Go on Kijiji, go on like Craigslist. You see all these guys are always posting that they want to lend on projects. If it's a good enough deal, I think even if your credit score is bad, no income, nothing, like 8%, you can still get the deal. So you could get the deal, renovate it, and then flip it, right? 10%, who cares for like 3, 4, 6 months? The interest cost doesn't matter at that point because you're only holding it for a few months. So your interest cost is a few $1,000s. If your margin is like 50,000 or 100,000 profit, you don't care. So a lot of flippers will just get like a non-conventional C mortgage from a private guy. Someone will just hand them a mortgage for like 10 or 12%. And that works. Long term, that doesn't work because you don't cash flow. You can't cash flow at 10 or 12%. It has to be a short-term hold or a play in which, you know, you get that mortgage on it and you refinance out. Look for the fee structure because they'll punish you when you pay those mortgages out early. There's early penalties and stuff. But let's say you did that, you got the property locked up because it's an amazing deal. You pay the 12%, you get the deal, then you refinance out at 3% with a bank mortgage and pay the other guy out. So a lot of strategies you can use if you can't qualify right away on a deal. You can use to kind of make the deal happen. There's also joint ventures, guys. You can partner with someone who has good credit or good income and then get them on title with you. Even for 5% of title, they'll get you an approval because their whole income gets thrown in, even though you own 95% of the property. Okay, let's go back up and hit some questions. Okay. In your experience, should you renovate the basement of a new build right away and try to house hack or wait a few years for the ground to settle and to qualify for the tear-on warranty? Yeah, so tear-on is the builder. It's basically the insurance you have that protects you in case the builder screws up. And the builder has to honor certain things for like a 7-year period. There's like a 1-year anything, 2-year, they'll do most stuff, and then like 5-year plumbing or something, 7-year in total. I have to go back and review it. I did have a tear-on my new build house that I had before that I sold. Had the tear-on warranty. My thought is this, at least wait 6 months because the concrete really does need a cure and the builders will rush. They'll build right on the concrete before it's really fully cured. I would say definitely wait a little bit, let it cure. Don't finish it right when you move in. Give it like at least 6 months. And then you could do it. It's like when they rush houses, they'll pour the foundation and they're in a rush and they'll just frame like the second or third day. You got a bit of cracking, stress cracking and stuff like that. If you go ahead and frame like the heavy weight of the stick frame foundation or the house right on top of the foundation too early. A lot of builders will rush that. My recommendation would be find a way to house hack. Maybe you rent out a portion of the garage. Maybe you have a bedroom you can rent out and you move the person down. Or you just take the L, take the loss for a few months until it's cured. Maybe even 3 months. Then you could do it. Run some dehumidifiers. Really get it dried out down there. Make sure there's no issues. I guess you're right. One of the issues of covering things up is you don't know if the foundation cracks. It takes a full year actually to find out if the foundation might crack or if there's any settling. And so most times it's not structural, so you don't have to worry. Like in 99.9% of cases, you're fine. Like the builder's probably not screwed anything up. But I mean, yeah, you wouldn't know if you covered all the walls up, you framed everything and drywalled it all. You'd never know, and covered the floors. You'd never know if anything was cracking underneath, stuff like that, those sorts of issues until it was kind of too late down the road. So yeah, I mean, the call is kind of up to you. I finished my own basement, I think about 9 months. We lived there for 9 months with it not finished, and then we did it. So something to consider. I had my brother at the time living. I have a younger brother. He's like 20 years old. He was living with me at the time in our we had 2 guest rooms, but in one of our guest rooms in the new build house. And then I moved him. I made a suite for him in the basement. So he lived upstairs. Then when my daughter was kind of born, it was getting a bit much with her crying and stuff, and him being upstairs there on the 2nd floor. So we did then finish the lower suite. That allowed us to house hack a little bit. He didn't pay me much. I mostly subsidized his living costs, but there was a little bit of money going back and forth there, and it's sort of house hacking. At least we were effectively utilizing the space. We were optimizing it in a way that it was good it was a win-win for family and for everything. So definitely recommend house hacking. I'm a huge proponent, as you guys know, of rent hacking and house hacking. I'm actually really seriously considering rent hacking. I haven't done a video on this, but I want to. Where houses in my area here, like I'm looking at $600,000 houses, way nicer than the one I live in now that I own. $600,000 houses that if I were to buy it, the mortgage payment would be like $2,000 a month. Everything like, property taxes, maintenance, all these things would be another probably, I don't know, call it $600 a month on a house that size. So you're getting $2,600 a month, $2,700 a month plus utilities on a house that size, carrying cost. And these houses are for rent right now. I'm seeing agents posting and people posting on Kijiji for $1,800 a month. And I'm like, what? That's below cost. Even with mortgage pay on, they're losing money every month. And these people are open to rent to owns. So I can sign a contract with them at the end of 3 years that I can buy the house at today's price, or like inflation adjusted. So they'll say I want 400,000 for the house in 3 years, and they'll sign that. So they get no appreciation and no cash flow. These are just bad investors looking to park money to make their 2% rate of return. And I'm like, why would I want to waste my capital to get a 2% rate of return when I can just go rent? So believe it or not, you can actually rent in some markets, and it makes way more sense than owning. So I'm thinking about renting out my current unit where I live right now, potentially for $1,500 a month, $1,600 a month, taking that and throwing that towards my rent for $1,900, but taking that $1,900 rent and splitting it with a friend. If we get a walkout basement, one of these big houses, 2-car garage, he'll pay me like 900, maybe $900 towards it, and we'll work on a scenario where we're each paying like $950 each to have this massive like 3,000 square foot, 3-story house, right? And so I'm thinking about this, and I'm like, wow, like I'd actually, my living costs would go down by renting out my space and him renting out his space and us throwing our money towards a rental, which is crazy because believe it or not, guys, $1,900 for these $600,000 houses. I have $150,000 houses in London that rent for $1,700. We're talking $100 difference for for 3 times the cost of the house. It makes no sense. The London market is so broken. In Northwest, a lot of the properties here, the new builds, were sold to Toronto and Vancouver buyers. And so agents just sold them. This is maintenance free. It's a brand new house, all this kind of stuff. So these guys just dump money into it. And the problem is at that rent range, when you get to like the 2,000 mark, when you start cracking that area, unless it's students, which it's not up here, it's hard to get students in this area of London, then you're left to like executives, most of them who are wealthy, who can afford the higher echelon of the rent area, they can just buy. And in Canada, most people want to buy. And so there's no good rent tenant pool, right? And I can go there and say, hey, I got 100 years of rent in reserve. You're willing to rent to me? Of course they're going to rent to me, right? So like I'm one of the, I guess I'd be a great tenant. I have good credit score, all those things. So I could maybe take advantage and arbitrage the rent market. And I was thinking to myself, like, how do I take advantage of this? Because let's say it was the inverse way, I would just go buy those houses and I would milk the hell out of that return. But it's the opposite, right? It's the inverse where these really expensive houses have terrible returns. And how do I arbitrage or take advantage of that situation to make a profit? Well, the best thing to do is to keep buying more small houses, crank out the cash flow, and then like use the capital I would have used to buy and all that against the small houses, right? To buy more of those, and then basically rent where I live and own where I rent. So that's kind of a crazy idea. I'm still throwing it out there. If anyone has any idea about why maybe we shouldn't do that, throw that out there. I know there's some emotional, psychological factors, but financially speaking, renting actually is probably the better scenario in London. It definitely is in Toronto and Vancouver. I don't know why people own in those cities because the rates of return are terrible on the house that you live in. Something to think about. I know everyone has their reasons, right? Sometimes you can make a way to house hack, but even with house hacking, you could rent hack better. You can rent that exact same house and then sublet the lower bedrooms, right? And have your rent be zero. All these things you can do, to just get your costs down. Renting requires no capital. There's no risk. It's just a better scenario potentially. So think about that. Let's get some more questions here. Okay. Is everyone getting proper audio? Yeah, we talked about that one already. Excel file, scrolling. I watched all your videos. Yep, seen that one. Okay. Could you elaborate on hard money lending? Where do you find your lendees? So, sorry guys, my apologies. Dealing with this man cold. Okay, so hard money lending, private lending. Fantastic way to make money. I know a lot of people who do it. And honestly, most of the people that successfully lend that with the highest repayment rates tend to lend to people in their network. People that are ingrained in their social network or ingrained in their local real estate networks that they know they trust. So that's how I would do lending. It's to people that I can actually have a relationship with and trust. I would never lend to someone I don't know, someone who isn't in my market. The other thing is too, if you're secured in second position so there's like a bunch of ways you can lend. You can lend first secured position, like a mortgage, where you're first secured on title. So you have the first right to seize the house. If you're in the second position, you can also seize the house, but you're in second position to the first lender being paid back. So the bank, and then you're a second mortgage. There's even third mortgages, but they're very rare. You'd be in third position. So if it's sold for like 200 and there was a mortgage for 150 and 50 and yours was 10 or 20, you get paid nothing. So that's third position is not great. And then there's unsecured, which is even worse than being secured third position. But unsecured, you're secured against nothing. You can sue the person, right? You still have the right to sue them against their assets. But if they ever became insolvent and they lost everything, you would never get paid back because you're not secured to any asset. You're just, that person's made a guarantee, or their company and the person has made a guarantee to pay you back. So something to kind of think about when you're lending. I've done unsecured lending before, to friends and people in the network and people I trust. When I do second mortgages, I now do them only on properties that I really like. So I'll look at the property, and if I think the property is worth 400, I'll say conservatively it's worth 400. Always got a mortgage on it for 200. I'm fine to lend him 150 or 100, and then we're within the 80% loan to value. If something were to a bit of a crash or something were to happen, I've already been conservative on the valuation. I've loaned now, take it up to 80% loan to value. If I have to seize their house, that's cool. I'm ready to do that. So that's something that you can do. I've had opportunities to be registered in first position on flips before, which is cool. You finance the whole purchase price, plus you give them all the renovation budget. So the flipper literally has no capital outlay. I back them financially. They do all of the work. And basically, in these projects, I'll look at properties that are bought 50 cents on the dollar. So $150,000 house worth 400 when it's done, and I know the renovation's like 60, then I don't mind putting in that capital, right? Because I have such a margin that even if the flipper fails and walks away, I can then take the house because I'm in first secured position. I'll just take that deal over. And I know I have the infrastructure in London to finish that flip off. I wouldn't back a flipper in Toronto. I would only back someone in my market close enough that I'd be willing to take their project over. If things went south, I'd be ready to go ahead and take that project and finish it. So that's sort of my thoughts, guys. If you're going to be doing hard money lending, ideally you do it in the area in which you live if you're prepared to then take the project over. Because what happens if they die or get sick or they make enough money that they move away to, South America or something, right? And they disappear. You're stuck with a house that's half renovated that won't sell. So you have to be ready if you're the first secured lender, you don't want to sell in a fire sale. You don't have an emergency sale where you just have to sell it and get whatever you can. You want to be able to finish that project off. So if someone came to me in London that I knew and trusted or that I developed a relationship with and said, hey, like, would you back me? I want to flip properties. I got the energy, I got the teams, I got the crew, I got the deals, 80 cents on the dollar, 50 cents on the dollar. Would you back that? Of course I would. I have to look at all the numbers and everything, but probably. Hey, Jonas, how you doing? Just saw that question pop up. A lot of loyals on here tonight, which is fantastic. All the people that are on every single Wednesday. Glad to see you guys on here. I appreciate you all so much. All 18 of you guys that are watching right now, I appreciate all of you for staying on here. And I'm doing my best to provide value for you guys, all 19 of you guys. I'm here trying my best to give value for you guys. You guys can probably hear I have a man cold, so I'm suffering through. Wow, we have 20 people now. Let's just see if we can get this number up, guys. Let's share this video and see if we can get like 30 people tonight. That'll be cool. I know I'm sick, so do my best to perform for you guys with the Q&A. Talking about right now private lending because a question came in about that. How does it work? What are some of the ways you find lenders and lendee, like people to lend to? Kijiji is a great source. I see a lot of people posting ads saying, I'm an investor looking for, projects to fund because there's a lot of money out there that really wants to get to work. A lot of it's sitting in bonds. Like we have $1 billion like treasury bills and stuff like that in the States too, where people just have parked money in like 1.5% rates of return and savings accounts, and it's doing nothing for them. All of that money wants to earn 10 and 12%. It's so hungry to be employed because right now I would say if it's just sitting there combating inflation, it's not really employed. So it wants to be employed. It just needs people who have the energy, the hunger, the expertise to manage and find the deals. And then obviously, those people that want to do that and the deals too. So if you can find those, it's a win-win relationship. The rates of return you can expect, I would say on a second mortgage, I would never lend on a second mortgage less than 8% rate of return, maybe 8.5% now that interest rates have creeped up a bit. If you're in first position, you could take as a private mortgage, you could make them pay all of the legal fees to register it on title. So you'd make them bear all that cost. You would just put the capital onto the property in first secured position. You might take like a 6%, 7% in first secured position. Second secured position, 8%, 9%, 10%, 12%. Third secured position, never less than like 15%. Unsecured, I never do unsecured lending less than okay, that's not true. I've lent to friends for like really cheap rates, but I would say between 12 and 15% for unsecured lending is like the lowest I would ever go. And I've only ever lent to a person that has a net worth of considerably more, like I look for 10 times more than they're borrowing from me. So if they're borrowing 100 grand from me, they better darn well have $1 million clear after they pay off all their other debts. I don't want to lend to someone who's got 10 grand in their name. I'm not going to lend them 100 grand unsecured, not secured against any property, because what is the chance they're going to pay me back, right? So you got to factor in like what's their credit score. You're then becoming like the bank, the lender, right? So you have to learn how to evaluate those loans, those loan applications that are coming into you effectively. And it's more of like an easy process. It's not the same way as a bank where they're going to be like back and forth for days requesting things, but it's a lot smoother and simpler. Like if I wanted to close on a property quick, I would just call. I know some people I could call who would lend me at like 10% any day. Like right now, like if someone came me a deal that has to close tomorrow, I could probably get funding for it. I could just use my line of credit and stuff. But let's say I didn't even have that. I could borrow the money. If I had no money, I could borrow it from someone because I have that reputation, right? And so you build that reputation, and that helps you to, as a borrower, right? That helps you, if you have that reputation, because lenders want to lend to you when you have a nice portfolio and a proven track record to get the deals done. The funny thing is with the banking system, currently with all the major 5 banks in Canada, it's actually the opposite. The more deals you get, the harder it is to finance. So like I'll be killing it and I'll have like 10 properties like cash flowing, like let's say 20 grand a month or some crazy number. And the bank's like, oh, we don't want to touch you. Like, ooh, get into commercial real estate. We don't want residential real estate. And it's crazy. Like that's why everyone grows. I've been having a lot of conversations as of late with a lot of different lenders, credit unions, banks, and finding out why do people not let, so what happens is when you get to a certain number of properties, you have to go into commercial financing. So you're paying 5-6% rates of return, you might as well buy commercial properties. Because that was the advantage of buying residential is you could buy at you could borrow at 2.7%, 2.9%, right? And that's the advantage of residential real estate. So you lose all of that advantage as soon as you have a lot of properties in a corporation or you have too many personally. The only way to do it now, I think, where you can keep getting cheap debt and buying small properties is the way that I'm doing it right now, guys. For all the people who haven't been investing with me in the last, hopefully got 6 deals now, locked up in the last month or so, I'm having the investor buy the property because they are dentists, doctors, whatever. They have great incomes. They can finance the property. They put up the capital, and I take a smaller percentage of profit. And I manage everything. I'm the active partner. I do all the management and I do all the deal hunt, everything. And it's just ready to go. Just basically get financing, close the deal, provide the money perspective, and get a double-digit, triple-digit rate of return. And so that's sort of a scenario where I can use residential real estate and scale up because the banks won't fund it. It's crazy. If I had put those properties in my own name, in my own corporation, they wouldn't fund me. But I go to them with a 20-unit building and they'll fund me. All of a sudden, it's a different conversation. It's weird that like they just don't want you to have 100 houses. It just, for some reason, you have to go into like B and C lenders. You can't get that 2.79, 2.99 rate of return on these properties. And that's the advantage of residential less than 4 units, is really the fact that you get that residential financing. As soon as it's at 5% rate of return, you might as well go into commercial anyway. All of the commercial projects are based on like 3 and 4 and 5% rate of return. So you can still get like apartment buildings can still get 3.49, 3.79 rates of return. But I mean, it's just, yeah, as commercial properties tend to have higher overall expenses, which make their margins lower. So the margin on a big deal like a 20 unit or a 30 unit is typically like 15%, whereas on a residential, I'm getting 50% margin. So my profit percentage is really high, but the scale of the deal is so big that 10% on 5 million is still 500,000. So you're still making more money because it's a big scale. But imagine if you bought $5 million in property in these small properties at 50% margin. It's crazy that, hey, Daniel, how you doing? Hey, thanks. I appreciate that comment. I'm glad you found me through Graham. That was the intention of us doing those videos, right? Was to share the information. The more people I can help, the better. But if you had $5 million in residential properties where I'm getting 50% margin, just fat, juicy returns, the rate of return is instead of like it's 2.5 million instead of 500,000. So that's why I like residential over commercial. The problem is the lending. Banks and lenders just don't want to lend on residential when you have a lot of residential properties. I don't know why. Like all the REITs and I guess all the trust money, all of the institutional money, it comes with like when an institution like Sun Life or someone writes to my corp, if I have an investment corp, like a check for 100 million, they have stipulations that I can't buy houses with it. I have to buy commercial properties with it. That's crazy because the returns are way better if you have a good strategy with residential. But yeah, I mean, it just is the way it is. I don't know why it is that way. I'm just working on growing, helping investors build some money right now, build some relationships. Like I say, the plan is to do 50 deals this year. I want to do 50 property deals, and I want to hopefully like 10 investors to do 50 deals, so 5 deals per investor ideally, but I know some investors can only have 1 or 2 deals. But it'd be cool to then basically, if I can get someone's down payment back in a year, they're gonna buy another one with me, right? Because I just got all their money back and we still own the property. So we own a property, refinance the money out, or we sell the property, we buy 2 more. So it's once I make money for people, and that history starts to build, I think it's gonna accelerate and the growth's gonna be huge. And I want to build this company that's big enough that I can then leverage that company and all the cash flow and the profit, right? Because even 100 properties is $25 million at 250,000 average purchase price. If I had 1,000 properties, that's $250 million in assets. If I had 250 million in assets, that's 25 million a month in rent on average if it's 1% real properties. So at a high level, I've got $25 million a month in rent coming in. That's insane. And that's not even that hard to, like, I could build that in like 6 years if I just keep buying at a rate of like a property a week, which I could. Which begs the question, should I become a real estate agent and a real estate broker? Probably. Just to control the deal and rather than using someone who I really trust. But that's something I'm throwing out there. But yeah, so like what I can do with all of that, it does nothing for me because who cares if I have like all that money? I can take that and funnel that into YouTube or funnel that into projects to give back because that's what my real motivation and passion is, right? Is like I want to make people money. I want people to like have. I want my network to really valuable. And if I have like 20 or 30 people that I've made $1 million for, all these investors, that's a really sweet network to have. If I ever get into any trouble down the road or something happens, I've got people that I can call who know that I've made them a ton of money, who trust me and believe in me. And so that's something that like I just want to build that network. Really cool to have. Just I don't know. So it's kind of sort of a goal of mine. I wrestle with like spending time on a beach in Costa Rica and enjoying my life. I have friends who go to Costa Rica and go all over the world and then traveling, and I'm so jealous sometimes. I'm like, I could be doing that. Like I've got the net worth that I could travel whenever I want. Like I never need to work ever. Why am I working? And here I am like grinding. I guess it's just part of who I am. And yeah, I don't know. It's just the way I am. I just like to grow. And I guess at some point, eventually I'll want to just enjoy life. But I'm enjoying right now the growth. I'm having a lot of fun with that. So sorry, man cold. Okay, let's get some more of these questions. I'm seeing some awesome stuff pop up. Noel, good to see you as well in 2 weeks. Hopefully we've got a chance to connect when you're in London. Okay, let's hit some more questions. 20 people on here. Let's see what's good. Okay. We talked about hard money lending. Now Jason's asking, landlording, can you talk about your transformation from owning 15 properties, then sold some, then now starting to acquire more as a corporation? In hindsight, I probably wouldn't have sold all my properties. I would have sold maybe 5 of my properties and not sold 11. So I sold 11 properties. I wish I would have sold 5. In hindsight, I wish I didn't sell. And part of that is because I'm doing it now in a bigger capacity. And so I now have the systems in place. I didn't at that time. I was at a point where like when you have 15 or 16 properties, you're at a point where you can't hire a full-time manager. You're doing all the groundwork yourself. There's I had 70, 80 tenants texting me. Like I probably texted each of my tenants twice a month, at least to collect rent. If they're late, to text them again. If I was doing any maintenance requests, like anything to fix something, I have to give everyone notice in the building. So I would probably be sending 4,000 texts a month business. That's a lot. Like that's a lot of stress. And I just needed a break. I wanted to go on vacation. And so at that time, a lot of my headspace was that the market's doing really well. I've made a lot of money in real estate. I might as well cash some of that out. I can always buy back in again. And that was my thought process. I was like, even if I sell these, I'm a really good deal hunter. If I sell these at market value today or darn close, I guarantee you I can buy back in on a different property at less than market value. So I could sell my 11 properties, use the cash, lever it up, and then buy 15 next time or something, right? Or 20. So that was my thought process. It was like, even if I sell, I've locked in some gains. Yes, I pay some capital gains tax, but I've locked in some gains. It'd be cool to have a whole pile of cash. It was cool to have a whole pile of cash. It was cool to experience that when you have a lot of money in your bank account, like, even when you get into like 6-7 figures, it's really cool. Just a cool goal I had. And, in hindsight, wish I didn't kill a lot of that cash flow because I had some really great cash flowing properties. And I've watched someone flip 3 of them already now for a lot more than what I sold them for earlier this year. So crazy that if I just held them, I would have been $300,000 richer today. But hindsight's 2020, guys. So it is tough. It is tough. You go back and forth on what you should have done, could have done. Here's what I know for sure is that the decision I made at that time was made with a lot of thought, energy, and analysis into it. And I did a lot of numbers, and I assumed the market would be flat going forward. And I assumed that the value of my mental psyche and the enjoyment of being with my family and being able to travel and having that freedom was more valuable than the cash flow I was getting. And I'd rather have diversified income streams than wanting. At that time, I had all of my net worth in real estate. And so it was nice to pull something out, get your TFSA filled up, invest in different areas, Run 186. I'll get to your question here in a sec. I saw it pop up. I promise I'll get to it. Stay on the stream, and I'll get to that question in a sec. But yeah, so at that time, the decision I made to sell 11 properties, I did it with the best of intentions for myself and the best of analysis. And I have no regrets. What I did right. I made a ton of money. I locked in a ton of money, pulled out a ton of cash. I'm now diversified to the point now where I don't even need my real estate portfolio. Like without real estate at all, like forget my 7 properties that I have, I don't touch any of that. Like every dollar I make from all the property management, all the investing I do with you guys, like all the investing we do, if I take percentage of profit on sale, the property management stuff, my own properties, my 7 rental properties, all the cash flow, all the appreciation, that is all going to like future Rosehart generation. I don't need it to live ever. I just live on my dividend income, can live on like some of the lending I do, all that kind of stuff that I get involved in, right? Those little projects or businesses that I start. I have this capital now I can invest. And so basically it allowed me to have another layer, another wall of protection. If the real estate market crashed tomorrow, or it won't, but even if it did, if we think through it, there'll still be cash flow, but whatever. I just wanted to have like so many layers of resiliency to my financial independence and my retirement. And at that time, I just wanted to experience a few months of being done. And I did, and it was great. I went traveling, did a 3-week vacation up through all the way out west. We drove out west to Vancouver, and then I went up to the Yukon and visited some family there. It was a really cool experience. I went an hour south of Anchorage, Alaska. It was awesome. Had a lot of fun. Came back and was like, a buddy of mine was like, Mike, we really need, to grow a property management company. We need to really build an investment company. Mike, you're so good at this. You've trained me. You've trained so many people. Why don't you just keep doing this? And I'll help carry a lot of the burden. And so that was something that, I was like, you know what? I'll do that. Like a lot of investors have been poking me. They want to invest in properties. Fine. I'll do that for people. It'll build my network. I'll have some fun. I enjoy growing. So just saw something pop up. Milky Bar Kid. Shoot your question here. I definitely will get it. 100% guaranteed. I will answer every single question. Just throw it down here and wait a minute, and I will shoot through everyone's questions. I promise. You guys have great questions, and I try my best to give you at least adequate answers. Today is a bit of an exception. I'm trying really, really hard right now to keep my energy levels up, even though I feel like man cold. Okay. Back up here. Let's see what we got going on with the questions. Okay, we answered this question. And I'm not buying really I do have a couple corporations, but I haven't been buying in corporations. I've been buying with contracts into my corporation where the investor is buying the property. I guess I clarified that. For those people who are interested in investing, 70, 80 cents, 90 cents on the dollar, or ability to find a way to turn into 120 cents on the dollar through renovation. Tons of cash flow, lots of deals. I'm just going to plug for that. If you're interested in getting those kind of returns, message me. Two things. If you have the down payment and you have the ability to get the financing, cheap debt, then we can do deals. I can find you deals all day long, and I can manage them all day long. Building the systems, I'm growing the company. I'm gonna have a property management company that's gonna be everywhere in London. I'm gonna bring in some key people to help build this company, some key workhorses, and it's gonna be huge. So it's gonna be kind of fun to really get that growth. Okay, let's keep going with the questions here. Do you need a license to build a tiny house? So there's no license per se. You need a permit to build any structure greater than, I think, 10 by 10. That structure, my garden that I have, sorry guys, that one was done by permitted already, and I just refinished the structure. So it already had hydro running to it. It already was a finished structure. I just nicer, and that's the story. I'm sticking to that. And that's actually true. But yeah, so to build one, you could build a shed. Like you put these bunkie houses down. These guys drop off. I know someone from Toronto who has this one you can drop off for $5,000. It's like a finished cabin. It's kind of cool. And it's below the minimum square footage requirements. It doesn't have any running plumbing, but you could get a permit with the city to run plumbing to it, and a permit with ESA, Electrical Safety Authority, to run in Ontario hydro to the property. So you get permits to do that. I don't know the zoning. If you have a secondary unit, I think you're allowed to just license it as long as the zoning allows for it in your municipality. Some cities are more supportive than others. I know Vancouver and Toronto, those areas, they have a housing crisis. London does too, but for some reason, London is like, the reason we have such a housing crisis is because London is so anti-landlord, so anti-densification. Like they limit all houses to 5 bedrooms. They limit, like you can't have a duplex, you can't have a triplex, you cannot increase the densification. And they're out there handing out fines to like every landlord. You think that's going to help the housing crisis? You think it's going to help tenants find places to live when landlords aren't allowed? I know a guy who has a duplex that's illegal, and the city literally barred the unit. He can't even allow someone to go into that unit. They're like, no, you cannot rent that. This zoning doesn't allow for it. It's like, why would they do that? That's just stupid. Like, find a way to rewrite the legislation to allow him to do something to renovate that unit to a standard. Maybe you got to add fire code separations and things like that, or an egress windows, whatever. But give him an option. Say, if you spend 10 grand, you can rent it. Don't just say, no, this space is unusable. You can never rent this out. That's a stupid strategy. The City of London really needs to work on their. I'm actually really glad Ottawa put out some legislation, the secondary dwelling unit. You guys know, we're now allowed in every residential unit to have a second unit. That's 40% of the space. London actually blocked that, and they said they weren't allowed to do it in student areas. Weren't allowed to do it in houses you didn't live in, like not your primary residence. But that's been overturned, and you can now do that in London. So stick it to the man. That's good. Good for London. Really fantastic for development here. We are getting a ton of immigration and a ton of people moving here from different cities. London's an awesome city with diverse employment opportunities. It's good. We need it because people can't find a place to live. That's my rant. I'm dropping the mic now. That's just done. I'm sick. If I wasn't sick, it'd be a better rant. But yeah, London, you've created, the City of London has created their own problem. And they should be incentivizing landlords to create affordable housing instead of punishing landlords into, I don't know how you punish a landlord to offer more affordable housing. It doesn't work that way. You have to incentivize. Okay. Could you speak to any markets that you think would be good to invest in east of London? Harrison Snowden said. Okay. So Harrison, how you doing? Okay. So I'm not a huge fan of East London, but if you're going to be in East London, I like being, I guess what, north of Dundas. You know what, honestly, there's a lot of good pockets in East London where you're on a quiet subdivision street. You're not right on like Hamilton and Egerton, because like I don't like that area that much. But if you're away from it a little bit on one of the quiet streets, it's not so bad. There's been some gentrification to the neighborhood a bit. There's less of the needle shooting, like less shootings, stabbings, people shooting up in the alley there. It's getting better. So yeah, I mean, Fanshawe College is safe. The nice thing about Fanshawe College is that I just saw it come up. Sorry, I meant east of the City of London. Oh, okay. I'm not a big fan of, there are a lot of little small towns east of London. My own family is from Tilsonburg, which is like 30 minutes, I guess, sort of east, southeast a little bit of London. And there are lots of opportunities there. I hear really good things about some of the surrounding, you keep going east, you hit Woodstock and stuff like that. I know people who invest there and do all right. You don't have the same growth that you have in London. You don't have the same stability that you have in London. Like they have one or two employers, and there's a belief that small cities are disappearing, right? Like more and more around the world, small cities are disappearing, and because they just can't afford to maintain the water lines, like all the infrastructure in that city. So what we're finding is that these small cities are disappearing, or they're closing the city down entirely. People are moving to the big cities. So I don't know if I'd want to own a ton of real estate in small cities. What happens if that city loses a major employer and or have major infrastructure issues, like they have to repair, whole water lines or something like that, and the water lines cost so much that the property tax bills would be $5,000 a person. Everyone would leave. The city would become a ghost town. There's a lot of stories of that in the maritime areas and stuff like that. Even in Ontario, Northern Ontario, where cities just became gone. And when the market isn't as strong as it is now, those cities are the first to take a hit. London will be fine. It's those small cities that'll take a bigger beating, I think, than the big cities. So that's my kind of thought. But you can get really good cap rates in small cities. And so if you do your research and you believe strongly in that market, there are some great markets, Tilsonburg, Woodstock, east of London. You've got a bunch of little cities there that people I know have properties out there that do cash flow. So, I mean, if you're on well and septic out there, then you would never have to worry about the city services. And if the city ever dried up, you'd still have a farm. So that's something to think about too, I guess. I know farmland has a terrible return on investment from a cash flow perspective. You're looking at like inflation, like 2-3%. So I don't know why you don't farmland other than for development, but I don't know. Farmers own it. They don't care about the low rates of return. Okay, let's.
Make money as a farmer unless you're farming 5,000 acres.
That's right. You need a huge amount, and the reason for that is because the rate of return is bad. People should sell their farms and buy rental properties. They get way better rates of return, but no one wants to do that because they've been farming for generations. There also there's a development play too, right? That's a huge piece. You can definitely get some resale value if you're in close to a major city. Okay, pro funds in Ontario I heard is good. I don't know anything about pro funds. Can't speak to that. Can't endorse it. Don't know. Okay, Malco Trundo. I believe you're wrong with ketogenic diet. Try raw, vegan, raw fruits, fasting, and your immune system will boost immediately. Research Dr. Robert Morse, Gerson therapy. Yeah, I'm on the fence about that. It's interesting because humans have eaten meat for the longest of times, and there are people who you can literally just eat beef. Like we know Jordan Peterson, for instance, is one of the guys I've been following a lot who just eats beef. Like that's all he eats, and has all the nutrition that you need: beef and water, salt and pepper. You can literally live off that. If you just eat plants, you actually need to have certain supplements. You can't just live purely on plant diet. It isn't. We weren't meant to. I don't think actually just eat vegan. I know a lot of vegans. I have a ton of vegan friends, so they're gonna shoot me later, I'm sure, and slap me in the face. But next time I see them, I'm sure if they ever watch the stream, they'll be like, "Mike, you're totally wrong. Vegan's great." I've eaten vegan. I supported my wife. She's pretty much vegetarian, so supported her through that. I'd like to see her eat more meat for her health. Quality meat is the key, right? Like the meat that they sell in supermarkets today is full of antibiotics and drugs, and it's just bad, right? Like I like some grass fed. We buy quarter cow from a grass fed farmer that we know who butchers it himself, right? So that's, corn fed beef is not. If you feed a cow, it's a tangent, but if you feed a cow beef, or if you feed a cow corn, it will kill it. Like unless you give it certain shots and stuff, it will kill it. It can't even eat that. So, and that's what they're feeding a lot of the cows today. It's just not good. So the quality of meat is the real problem. Meat in and of itself, if you look at the research, there is actually some research that the American Heart Association got behind. It's actually wrong. It's now been proven that the stuff they associated in the 50s where they said like we should be eating a ton of grains, like we should be eating a ton of carbs, basically like breads and pastas, and then eating like a little bit of meat, and they're saying meat was causing heart attacks. Not true. Sugar and carbohydrates are the real culprit. So if you're gonna go vegan, just don't eat a ton of breads and pastas. I know a lot of vegans who eat a lot, way too much sugar and way too much carb. So I'm totally about the whole foods, fruits, vegetables, and meat is good too. Honestly, there's a lot of really good nutrients in beef. And I don't have any research on this, but my thought is that a lot of the plants, I know a lot of people who eat certain plants and they get sick. Like I know people who eat certain, they'll eat like strawberries and they'll get like a reaction, right? It's because plants have their defense mechanism is for it, like when certain animals eat it, you get sick, right? So what you find is that these plants have defense mechanisms built in. And so some people, every person's different, but some people get reaction. They eat a whole bunch of, certain vegetables, and like lentils are really bad for that specifically. They have a really big issue going through the system. And I'm just getting on a tangent here, guys, but I honestly think that I'd rather have the cow have that reaction because their stomach's designed for it, and then eat all the nutrients that they've absorbed. So that's my thought. Feed them quality, pesticide-free like grasses and quality plant stuff. And you can still eat some of that, but if you eat too much of that, I think the body, our digestive system can't handle it quite so well. So that's just my theory. I don't really know, but that's sort of my theory is that if we eat all plants all the time, and that's probably not terrible, but I mean, it'd be nice to mix in some animal proteins as well. Like I know avocados are fantastic. I feel really good when I eat a clean diet like avocados and olive oil and coconut oil. I eat those high quality protein, high fat foods. Feels really good. Even the animal proteins, certain like beefs and stuff like that feel really good. Pork, I eat pork, I feel sick. So I just don't eat pork ever. Like very rarely I'll have some pork, but I prefer like beef, a nice quality beef, animal protein. I hear good things about eggs. It's actually a myth that like eating too much animal products causes like cholesterol levels that give you heart attacks. It's just not the research isn't there. I don't have enough time to go into that, but this doesn't have anything to do with real estate. So let's go back to the main Wise Wealth Wednesdays. I will do some more research into it because it's just more for my personal interest. Okay. I'll be using pro funds mortgages soon. Interesting. So I'm curious about pro funds. We'll talk about that, maybe in more comments later. Water heater, buy versus rent. I could do a whole video on this. It depends. It depends on a lot of factors. In the house I live in, I own it. In a couple other properties, I do own my water tank. And most of my other properties, I rent it. So a lot of my rentals, I like to rent it. Because like, especially if it's a natural draw system, it's like $15 a month. If it's power vented, I might go and buy it out because I think they mark up the power vented ones, like the hot water heaters with the fans on them. They mark them up like double the price. And I think they're like $200 more to buy them out. So it doesn't make sense. The rent numbers don't make sense. It's nice to have someone you can call if things go wrong. I don't know. I'm kind of on the fence about that. I would rather own than rent. I'm a big proponent of owning if the numbers make sense, but not till I'm blue in the face. Like I won't fight and say like, own houses until you're blue in the face. If there's a rental opportunity for $1,800 a month, go ahead and rent if it's cheaper than owning. Just do the numbers and find out what your internal rate of return is. Run the payments against the cost to buy out the tank or to put in a new tank, and run the numbers. And if your rate of return is like, and sometimes it's 6%, if the rental fee has been locked in at a low price, it might make sense. Say, hey, I can get better than 6% on my capital. I'm not going to buy this tank out. Or maybe it comes back at 18% return on investment. You say, hey, you know what? I can't do better than 18% tax free. So I'm going to buy out this water tank. I'm going to own it, save myself, make 18% on my money. So just do the analysis, run the numbers, find out. That's my thought on the whole rent versus buy on water tanks. But that was more rent versus buy anything. How can we ensure the person doesn't smoke weed in your rental home? I don't think you can. You can say they aren't going to do it, but tenants will do whatever they want. How can we know or reject people that smoke weed in your rental units? So Jason, you really can't. They can't smoke. You can say no smoking in units. So people can't you can actually require no smoking in your units. You can put in a discount in the new lease. You can put in Ontario a discount for not having pets, for instance. But you can't put a fee in there. You can say, I will reduce your rent $50 a month if you don't have a pet. That's allowed. You can say, I'll reduce your rent if you pay on time. But you can't charge late payment fees. Not allowed. But you can give them a prompt payment discount. So when you write your lease, I would say jack up your rents to a little bit above market value and then add in those sorts of things as a clause, right? A discount on rent, and say, here's a discount that if you maintain the unit to my cleanliness standards, you get $50 off your rent. And so instead of $1,400 a month, you rent your unit for $1,700. If basically if they don't do anything, you get that extra $300 because they're not clean, they're dirty. So you put those things in your lease. And you can punish the tenant for not doing what you want. You're incentivizing, you're offering a discount. You're incentivizing the tenant to do things you want them to do. They can't smoke in common areas. Cigarette and tobacco and marijuana are the same. You can't smoke in common areas. If there's a shared laundry or a shared air system, you're not supposed to be able to smoke in the units. You're not supposed to smoke near the buildings either, like right near windows and doors. The same is true for marijuana. It's the same thing. But if they're vaping or they're eating edibles in your unit, why do you care? That's the first thing. Vaping doesn't leave any damage to the walls, and edibles don't cause any damage. I'm personally not big into, I'm not big. I don't vape or anything, but I hear people that do it, and I'm like, honestly, I don't care. As long as it doesn't damage my property and bug any of my tenants, doesn't matter to me, honestly. So don't worry about it too much. I guess smoking inside the unit, like smoking joint or smoking tobacco, is a fire risk. So you can require that. Insurance companies can dictate that you don't have smoking units, I believe, and you can dictate that on your lease. And whether the tenant follows that or not, and how do you enforce it, different story, different conversation we need to have. Thanks, Tommy. Appreciate that. BR Bo says, do you have a documented process you follow to acquire quality renters? Would you share? Yeah, so I do have a process that I use. It's sort of ad hoc. A lot of the time I'll get references from people, and that'll be a great way that I find tenants. If it's out on Kijiji, and you have to be very careful about how you speak, and especially myself publicly, how I speak about this, because they're anti-discrimination laws, right? Like, technically I can't say no smoking. I have to ask them, do you prefer smoking? Do you prefer pets? When I'm on the phone, I'm screening someone for the first 5 minutes. I won't even show a person that I haven't qualified on the phone, or haven't qualified first, right? It's just a waste of everyone's time. So I'll talk to them. I'll say oh, I have an amazing dog. Do you have any kids? Or I have an awesome pit bull. He's a great dog. I love him. I'll make this up, right, for 2 minutes and be like, oh, I have this great dog. He's great. And they're like, oh yeah, I have a lizard and 3 dogs too, man. I love that you're a landlord that accepts pets. And I never said I accepted pets. I just said I like this dog, right? I'll mention that I like dogs or something, right? And then they'll basically give me the truth, right? That they'll think, all of a sudden they'll think I'm a pet-friendly landlord. And someone with 3 dogs, a lizard, and 2 rabbits, I don't want them living in a 1-bedroom apartment. That's going to be really, it's going to destroy the unit. So technically I can't discriminate against that, but I can choose not to rent to that person. Especially when there's 30 tenants, you have to pick the best one. You just have to justify the reason you're renting that tenant. So a lot of it is, what do they do for a living? Do they have, basically, can they pay rent is the big thing. And how do you get at that? We look at credit score. I ask my tenants to send me bank statements. I'll say, send me 60, 90 days bank statements. They don't have to. They're not required by law to send me their bank statements. But the good tenants always do. The good tenants will say, here's my investment account. Here's my TFSA. I have $8,000 in it. Here's my savings account. I have $2,000 in it right now. Rent's $800 a month. I have first and last in there. Here's my 60 days banking history, showing my paychecks going in. the ones that are making up their pay stubs, and a lot of tenants are doing this now, where they'll make up fake letters from their fake employers. They'll put landlord references down that are their friends. And I had one guy I called, and I luckily have a system I can verify if they actually own the property. But he's like, yep, I'm the landlord of this property. I was their landlord for 2 years. And I got started drilling in, and I found out that they weren't actually even the owners of the property. And then as soon as they found out that I knew that they were a fake, they hung up, right? So a lot of people put in fake references. You got to really just, it's tough, right? Like there's a lot of professional tenants out there. Probably the 20% ruin it for the 80%. So yeah, I'll do a whole video on that. Let's just side table that. What some of the tips. I want to do a video on tenant horror stories, and then follow that up. Now that I got you guys afraid, follow that up with how do you get quality, how do you screen for quality tenants in a unit and get top market value. The funny thing is the highest rent you can possibly get is renting to like an Ontario disability tenant or an Ontario works tenant. Those really rough tenants can't find a place to rent anywhere, and they tend to be really bad, so they'll pay like top dollar. I'm seeing them rent for like $700 a bedroom and stuff like that. Crazy numbers I've seen. They put in these terrible tenants and they trash the unit. And they don't pay their rent. So my advice to landlords out there are taking on these crappy tenants. Yes, you're getting more in rent because you can get more in rent from someone who isn't going to pay, but they're not even going to pay the rent that they say they're going to pay. So then how do you collect that? And the damage to your unit, the stress of dealing with these people when they are there for a few months, you got to replace the tenant. I'd rather do all of the work up front and put in a really good tenant, even if I'm getting, just market value, or even 5% below market value rent. I'd rather have a really good quality tenant in there than get 5% above market value rent and have a bad tenant. It's going to cause me issues down the road. So that's sort of my thoughts on tenant quality and screening and good. I mean, some properties are just crappy properties. If you have a C property, you're going to get a C tenant. You might be able to get a B tenant. I might be able to place a B tenant in a C property or a D property, but I'll never place an A tenant in a C or D property. So these people have these rough units, bad floor, they've been damaged by tenants. If you don't spend the money and invest in the quality of the product, because what you're selling is a product, right? A place for someone to live. And if you give them a good place to live, you get a good quality tenant. You have a bad place that's ugly and gross and just dirty. Most tenants just want a nice, clean place to live, right? So cleanliness is huge. No damages, like just the walls are painted. Even if they're not stainless steel appliances and quartz counters, you can have a nice B unit. It's like nice white appliances. It's decent. It's clean. I could put an A tenant in a B unit. It's possible to do, but I can never put an A tenant in a C unit. And there's a lot of C properties here in London that I pick up that are just tons of deferred maintenance, bad tenant placement. A lot of managers just do a bad job. They leave units vacant. They'll rent 3 bedrooms, leave 2 vacant, under rented. They'll put bad tenants in there, let them destroy the place. Bad management is what makes bad properties. That's where I get most of my good deals, is they've hired a management company. There's a lot of really bad management companies in London, a ton of them. I fired 2. That's why I started a property management company, because I'm like, it's so easy to be good at this. Like, I can rise above the average property management company like that. Like, just be a little bit better than them, and I'll be so much better. Like, they don't care about placing tenants. They don't care about managing the properties well. Property management is a tough job. Like, within 3 years, most managers burn out because you're dealing with the worst of the tenants, right? And like, most people want to hire managers. They hire them in their rough properties. The manager continues the cycle. Once you have bad tenants in like a triplex, it's hard to get A tenants in a C tenant building, right? They don't want to live beside a guy with tattoos and like smoking outside and like no shirt on. I'm picturing like this rough guy like with a motorbike. No A tenant wants to live beside that, right? So you have to get him out now, or you have to put another C tenant in to replace his vacancy. And and quality, and you'll just do so much better with better quality tenants that are going to pay your rent on time. My tangent is sort of done. Hey guys, sorry, I don't know what just happened there. Sash McFlash, we must have had a Wi-Fi issue. It said disconnected, so I had to reload this video. Luckily, we didn't lose the video. I didn't have to do a second video. We can keep this one going. Okay, so where were we here, guys? Let's try to bang through these questions so I can go rest. Okay, scrolling up, gonna go power sesh because I spent too long on these questions. Have you considered lease option? Yes, I have. Hope you get better. Saw that. Do you have a documented process? Talk about that. Yeah. How do you determine rent costs for TLC listed homes? What are major things you have to look at from photos to home inspection before purchasing a TLC listing home sold as is? Be very, very careful. Foundations, roofs, electrical, plumbing, just the majors, right? Foundation, roofs, electrical is the majors. Look for structural cracks and issues like that. All of that you have to factor in. These see, I don't even want to own these like D level properties, honestly. You get D level tenants, it's just not great. I love that come up. Rogers, why have you forsaken us? I know I have the half gigabit package. What's going on here? I don't know. I don't know why my connection is suck, but it is what it is. It's the internet provider. Can't control it. So yeah, honestly, if you're gonna buy a TLC house, make sure you have a plan to renovate it at least to a B level standard, so you can get like nice B tenants in there. I wouldn't rent crap stuff because you get crap tenants that are willing to um, take that kind of quality unit, right? Yeah, that's sort of my thought on the matter. Home inspection's good. Bring through a few contractors. That's a key thing. I'll always bring through contractors to review the unit. I'll bring in a foundation guy if I'm worried about the foundation. I'll bring in a good carpenter, electrician to test some of the stuff. You can pay someone $20, they'll come through with you. They'll do a better job than a home inspector would. You can go online. I might even put this out if I do a video on how to do a good home inspection. I want to do a video on that. I have like a 10-page checklist that I made of things that I check. And even though I know what to look for, having that list jogs my memory. I'll go in the attic, look around for, like I'll look for certain things. I can do a home inspection myself. And I find I do a better job than the home inspector does. And I'll go through my list and I'll write down all the things. This is a really effective strategy for finding negotiating tactics to get the price down, because you find all these problems when you do the home inspection and then you bring them back and you negotiate the price down. So that's something you can do. Once you have a locked up offer, no one else is competing with you. They're signed with you and they're afraid now they've committed time. They have this sunk cost fallacy in their brain, like, oh, they've wasted all this time. They have this offer signed with you. Now they're listing stale. They don't want to let the deal fall apart. So they'll sometimes come down on price. Or they'll know that you'll find things that they already knew about, they didn't tell you about. And then they're like, yeah, true. He found that out. Like, I'll give him a deal. So yeah, just be very careful buying as is houses. Sometimes they have major problems. So you got to make sure that in the last year and a half, last year and 3 quarters, I've seen a lot of properties being sold as is, going above asking, and just it's crazy because these properties used to just sit on the market and you could really just take them way down, right? Just beat them until the price was low enough that you just jab them down to a level where there's a huge margin, where you had like, 50 grand there in case the foundation's bad, or 50 grand there in case because most times you didn't in these as is houses, then you had a huge margin. Now people are paying like so close to market value, like people are paying almost exactly what it costs to renovate it. On these deals, just turn everything you have to do to the house and a little bit of a, right, have that 5-10,000 contingency there in your budget. You'll find that it's just not that great of a deal, and some of the turnkey stuff is actually a better deal than some of the as is stuff. Everyone wants to try their hand as a renovator, and a lot of people suck at managing cost and managing the budget. And so that's something to think about, is that a lot of the markets are rational, and you got to play up those advantages that if everyone wants a TLC house, maybe you don't want one because everyone else wants one. So yeah, just depends on your market. That's really a big thing to consider. Okay, let's keep going here. Thanks, Noel. Appreciate that. I definitely will do a video on that, about how I manage all of that. A video on, do you trade options? I don't do a lot of options trading. I've done it like once. Honestly, it's too much risk for me. I can't take that. I can't stomach that kind of risk. I'm a very risk adverse investor, and I like to bet on things that are sure. I don't go to the horse races and bet unless someone's told me that horse is going to win, which is insider trading unless it's real estate. In real estate, you're allowed to have insider information. In fact, if someone calls you and tells you something about a property that no one else knows, that information you can use and not get in trouble. So that's the beauty of real estate. I love it. You can the best real estate investors are insider traders they're insider real estate traders. And like information is everything. Okay, talk about credit score. If we had more time, I would check out those 2 videos I did on credit score if you want to learn a little bit about the credit score, because I would rehash a lot of that. If you had a specific question, I could maybe field that out. Tiger Rocks is always on. You're a local, fan, right? You're an everyday fan for me. So I'll answer any question you have. If it's specific or not, put it in there. Specific. Sorry, man cold. Correction: 2019 pre-approval is for a new build. Okay. Yeah, honestly, I didn't know that they could lock in rates that long. So that's news to me, that you can actually lock in a rate on a mortgage that far out. That's pretty far out. You probably still need to get official approval. Closer to, I think. Okay, sorry, not rent costs, meant to say renovation costs. I don't remember what the question was now. So I guess, how do I estimate renovation costs? I think we're talking about TLC. So I guess in that respect, we'd be talking about experience. You're going to leverage a lot of experience. So I know, because I've done it 10 times, that, for instance, when I'm looking at floors, I know I got a guy who can give me vinyl plank for, say, $1.50 a square foot, and I know a guy who will install it for 80 cents a square foot or 90 cents. Let's call it $1 a square foot all in. I would say, okay, that's going to be $1.50 for the vinyl plank hardwood flooring, $1 to install it, it's $2.50 a square foot. What kind of square footage do I have? Take out my tape measure. Okay, I got to do this room, this room, this room. The carpets are bad here, here, here. Oh, hardwoods and the living room are okay. Everywhere else, we got 1,000 square feet. So 1,000 square feet times $1.50 for material, $1 for labor, it's $2.50, right? So $2.50 times 1,000 is what, right? Do your math, $2,500. Boom. So your flooring budget, $2,500. Then add 10% just for wastage, whatever, just to be safe, right? You get bad cuts, stuff happens. So I'll add another $250 for wastage in my contingency budget. Then I'll go next line item. I'll go, electrical. Okay, the electrical's on the tube. It's going to cost me, in the past, I've done this for $4,000. If I'm not sure, I'll bring in a trades guy. I'll bring in a contractor, electrician, and I'll say, hey, come give me a quote. I'll bring 3 guys in to come give me quotes. And I'll pretend I own the property. And they'll give me a quote. One guy say it's $3,000 to fix this, $4,000, $6,000, roughly. They're not exact numbers, but that gives me an idea. I put it in the budget. Go conservative, go 5,000, let's say. Even if you can do it for 3. And then other stuff, I'll guess, right? Like the paint, I'll say, okay, this might be $2,000 paint materials in to paint everything. Countertops, might be $1,500 based on previous projects. Cabinet refacing, $1,000. Stuff like that, that sort of thing. Yeah, honestly, it's more of an expertise thing. Like the more you've done this, like now I can walk into a house and I can cost things out really quick, and I can get pretty close to what it's going to be. What I always find is once I get into the project, I'll end up spending an extra $5,000 or $10,000 to make it a little bit nicer, or I'll find something in the walls I didn't expect. And so that's why you have the contingency budget of that $5,000 to $10,000 there, just in case. But yeah, you can cost out a project fairly easily just by listing a task list of everything you need to do to the property, and you just cost those items out. If you don't know, you Google it, or you call someone and ask them to be there when you're doing the inspection. So that's how you cost out renovations on a property. And then you make sure there's sufficient margin, like a ton of margin. Sorry, guys. Okay, let's keep going with the questions. I'm getting fatigued, but I'm trying to keep my energy level up for you guys. Okay, I'm behind on the questions here. Let me get these banged out. Okay, does checking credit score for different banks lower your score? Yes, there's soft and hard credit score hits. The more you do it, the worse it is. So when you're applying for a loan, it's a hard hit. Costs you 3 points. So if you apply at 10 places, there'll be 30 points. Jonas, how you doing? Mr. Beefy says, winky face. Let's get those people up. I like that. Mr. Beefy 971 says, would you go on rent groups or ads and ask if they're looking to sell? If so, what would that look like? Yeah, a lot of wholesalers do that now. They do door knocking. They'll go on all the rental ads and just say, hey, are you tired of being a landlord? You want to talk about me getting you market value for your property privately with no real estate commissions, et cetera, et cetera. That's a great way to get into properties. Then even when I get in, sometimes I don't buy the property, but I say, hey, do you know anyone? They say, oh, I have a friend who just had like a fire on his house and he's so fed up. He'll sell his house to you for like 50 grand. So that's a great way to get referrals. You pay that guy $1,000 because he just told you about that. So you better, when that deal closes, you better give him $1,000 because then next time he's not going to call you if you don't pay him. So pay the hands that give you the information. Nothing wrong with that. We're in the information business more than anything else. If you need to make $50,000 a year to buy a $250,000 house, how can you buy 4 more houses over the following 6 years if you continue to make $50,000 a year? This is also with the understanding you're covering your mortgage with the rents. So life fitness, that's a good question. Check out my video on the snowball. Anyone can buy the Rosehart snowball. Anyone can use the burst strategy to buy 10 properties in 3 years or less. How I was able to do that. For one, you got to look at the fact that most banks use a rental spreadsheet when you're buying rental properties. And so each rental property services itself if it's the right kind of property. So some properties in Toronto and Vancouver probably wouldn't, but good properties here in London, like the $600,000 houses I was telling you guys about earlier that I want to rent, they wouldn't self-qualify. But all of the houses that I buy, they're just strong 1% cash flowing minimum properties. So the rents are really, really good. And so there's an excess amount of cash flow from each property and fed by more. So it was hardest for me to buy my first two. Once I had two, three, four, and five were easier. Each one I bought added to my income. So I had 50,000 income when I applied the first time. Second time I applied, I had 50,000 plus $9,000 in profit. So they look at that property, they add all the expenses up, the utilities, the insurance, the mortgage, and my rents were so high that after all of the expenses, I had $1,000 left over. And so it's $12,000 a year. So now they said that property crosses itself off. So the mortgage doesn't even exist. They pretend it doesn't exist because it's self-servicing, self-carrying. So that mortgage is gone. It's as if it doesn't even exist. Like you're applying again as a fresh applicant for your second property because you meet all the total debt services, you look at all the ratios, and you're good, right? In fact, my ratios got better because I now had $12,000 in income. So my second property, it looks like I have $62,000 in income. I have 10,000, I have 12,000 on paper, it looks like. And I may have played with the numbers a little bit, maybe underestimated the utilities a little bit, but all they really are going to check is the property tax bill and the leases, so the rent. So, I mean, they don't really verify utilities that much, but. So we're talking about, the first property is crossed out. It's as if it doesn't exist. Your second property, you still make 50 grand a year. Now it looks like you make 62. So it's even easier to qualify for the second one, and so on and so on. Once you get to a certain max number of doors or a certain max number of loans, banks stop saying, they send you over to commercial. So it's no longer residential mortgages. But your first, it used to be you could get like 10 with each bank. Now it's 5, I think, with each bank. So 5 with CIBC, 5 with Scotia. This is what I did. I had a few with Bank of Montreal, TD, Scotia, CIBC. So I was with different banks because no one bank would continue to lend to me, right? But here's a dirty trick you guys can use. You can buy 4 houses at one time. Here's a trick. It still works. Now that I put it publicly, it probably won't work. You can buy 4 houses at one time, all 4 houses at a separate lender, right? Go TD, BMO, Scotia, CIBC. Use the down payment to show for all 4. And then don't tell, theoretically, if they didn't ask, you could not mention that you're buying 4 properties all closing at the same time. Your credit report doesn't show, and if it did show, you say you're just shopping the mortgage around on the property that they're looking at. You close all 4 properties at once, get $1.5 million in mortgages, and you only had to qualify for 1 property. Because you had to qualify for all 4 at one lender. If one lender knew you were buying all 4, you need enormous amounts of down payment proof. Your total debt service would be crazy. But you can buy 4 properties at one time, and you can use line of credit to buy the other 3 for down payment or borrow the money from people. And you couldn't do that. You can't tell a bank you're going to borrow a down payment. You can't tell them you're going to use your line of credit. You have to say you're using down payment proceeds that are either like your own, like free and unencumbered. So that's a strategy that I've seen people use. I'll never admit that I've used that strategy. You can use that. It's a strategy you can use. It does work. I know people who do it. In the old days, there was no credit report at all. So I used to know, I talked to people who bought houses in the 90s and early 2000s, like mid 2000s. They're like, yeah, I go to all the credit unions and all the banks and I buy 10 properties at one time. And I wouldn't even disclose it. I just take my $60,000 salary and get 30 mortgages. And the banks had no, and then all of a sudden, like a year later, it would update or something, or there wasn't even a credit score online. It was like the old fashioned way. It was like disclose what you have for mortgages. And at that time, just the question would be disclose the properties you currently own, the current mortgages. And because they're all closing at the same time, you don't currently own any properties. All of a sudden, you own 10 on the same day of close. So if you theoretically could borrow the money or you had huge lines of unsecured credit, you could do that. Another pro tip, while I'm throwing out pro tips, this one's another actionable, tangible piece of advice you can use. When you apply for a mortgage, always, always, always use that same credit check to apply for an unsecured line of credit and a credit card. And at Scotiabank specifically, you can apply for a mortgage and often they'll throw you a $25,000 unsecured line of credit with the mortgage with one application. You'll say, oh, I need it for the renovation. So they'll give you an unsecured line of credit. Once you're done that project, you have 25 grand in unsecured line of credit, like 4 or 5% or whatever that you can access. And you get the credit card for 10 grand as well. They'll give you a Visa. And pro tip, guys, no credit application at all. You can laterally apply to have the line of the $10,000 unsecured on your credit card be transferred to your unsecured line of credit. So you can bring 10,000 from you can close your credit card or not close it, bring it down to $500 balance, $500 of available credit, and bring $9,500 over to your line of credit. It's a flat application that you don't even have to apply. They have to move the credit from your Scotiabank Visa to your unsecured line of credit. So I know someone did this and got $75,000 unsecured at every single bank while they were applying for mortgages. And so they have now 5 times $75,000 unsecured. And they didn't even apply for that. They just used credit cards. Every time they bought a mortgage, they transferred the balance on their credit. They closed that credit card down and moved that available unsecured credit to unsecured line of credit. Instead of being at 22%, now we're talking about being at like 5%, 4%. So that's how you get a ton of access to capital to grow without having to borrow from people. You can use the bank's money. It's just, I want to write a whole like ebook on strategies for financing because I've milked them all. Like I bought 10 properties myself just on a 50 grand salary, just saving my own money. Anyone can do it. That's the thing. Like anyone can do this. We just don't know about these little tricks and strategies. And I guess if I wrote the book, they'd probably tighten these loopholes up, but I don't know how they would because the questions they ask you are what properties do you currently own? What mortgages do you currently have? And the truth is, if you're buying 5 properties, you don't actually currently have any mortgages or any properties. They're all going to be closing. So you'd have, you could truthfully answer those questions and get all 5 mortgages at one time that you'd never be normally able to be approved for. So there's my pro tip, everyone, guys. Throw it in the comments. Someone say like 82 minutes or 86 minutes in, there's this pro tip about how do you do the snowball. And check out my other video, guys. I'll try to put a card up here somewhere for the how do I buy 10 properties in 3 years, how anyone can buy 10 properties in 3 years. These are some strategies you can use. I got tons more I want to share with you guys in future videos about ways to get access to cheap debt. And I was, at that time, I think I was borrowing at prime plus a quarter. No, prime minus a quarter. I went to TD and got prime minus a quarter promotion, brought that promotion envelope to Scotia and BMO and said, match that. And they lowered my line of credit from 6% to like 2.75. So I was borrowing on my unsecured line of credit and paying off mortgages. Unsecured I was borrowing, secured to no assets, at like below prime. It was ridiculous. Like one of them was prime plus a quarter, like ridiculously cheap interest rates at the time. So you can get cheap debt. And that's the key thing is cheap debt helps you grow really quick. If you're expensive debt, you're paying a lot of interest cost. Cheap debt helps you grow really quick. I really need to go faster here. We need to be done like soon. I get talking. It's a problem. I like to talk. I like to share. I enjoy it. Tagger Rocks, thanks so much, saying you're going to take off on YouTube soon. I appreciate that. I need to spend time delivering that 30-day financial transformation course for you guys because I think those videos would be really applicable to a broad audience beyond just real estate because it's more talking about a financial transformation from a personal finance level. Everything from how do you house hack to lifestyle choices. And yes, you can price match debt. It's true. Mortgages and unsecured lines of credits. I've done a ton of that, getting my interest costs way down. Especially when the banks are hungry, which now that interest rates have floated up again, they're getting really hungry again. So they're willing to make concessions. Like I've never paid for an appraisal on like the first 10 properties. That $400 appraisal, the branch manager comped me every single time. So I got $4,000 in free appraisals. And like I make sure that when I refinance, they're paying my legal costs. I've refinanced before and made them pay my breakout fees, my legal costs and everything. And I got a lower interest rate. So just know how to negotiate, guys. That's the key thing. Negotiation in real estate and everything in finance is so important. It'll help you just, be so successful. Let's try to go really quick. I'm sorry. I really got to wrap this up. Excuse me. Okay, let's keep going. Okay, keep going. We passed these questions here. Awesome stuff. Found about you through Graham. We read those questions there. Become a land baron. Geo and Mercury. I like that. I want to be one of those 30. Noel, no problem. We'll meet up. We'll make it happen. What's your key tip to becoming successful in life? By the way, you're my favorite YouTuber. Every orange counts. Every orange counts. That comment, that was amazing. Thank you so much. I'm your favorite YouTuber. That means a lot. Like I only have like 1,600 subscribers, so eventually like it'll be bigger. But that's amazing. Like there must be like tens of thousands of YouTubers out there, and I'm your favorite. Send me a private message. Any question you want answered, I will answer that for you. So I guess this question you want answered. Success in life. I think one of the key things for success in life is finding what you're good at. Find that thing that you really enjoy and that thing that you're good at, and then just do that. Like make that your passion, right? That'll be your competitive advantage. If you love what you do and you're good at doing it, typically they go hand in hand. Exploit the hell out of that. That's how you be successful in life. The other thing is too, guys, spend less, earn more, and maximize returns. You will be successful. It doesn't matter if you work at McDonald's. You spend less, earn more, and maximize returns. You will become wealthy. You'll be the millionaire who worked at McDonald's when you're 55. I was saving on minimum wage. I know it can be done. I don't want to hear it. I don't want to hear the complainy pants out there. But thank you so much for that. Every orange counts. That was amazing. I'll share more pro tips with you. That means a lot when people say stuff like that on here. It gets me happy. Even when I'm sick. This is why I came out, guys. The healing positive energies. What is your opinion on renting out rooms instead of apartments, as in 4 rooms versus 1 apartment? By the bedroom is considered rooming house, lodging house. You have to be very careful about the the logistics with that run I-68, but you get a lot more cash flow. So typically, and it depends on every market, like some two bedrooms downtown will rent for a lot more as a two bedroom than it will per bedroom. But in most markets, like a 4 or 5 bedroom will rent for a lot more per bedroom than it will to one family. So, or one group. So that's something to kind of consider and think about. Um, my thoughts on it are, if you can handle if you're just starting out in your journey and you have the extra energy and the time, do the by the bedroom, collect the rent from, 20 people instead of like 3 people in your triplex, you know what I mean, from each and every bedroom. Do it, crank up the cash flow. You'll get a way better return, but your time and your effort will be a lot higher. And your turnover will be higher, it'll be more work, a lot more energy, and you might get a bit more wear and tear on the property. But definitely something that like renting out by the room can make somehow properties in Toronto, they can somehow cash flow using strategies like this. Just be careful legally when you're renting out, it becomes a rooming house or a lodging house. You have to be careful with your insurance, and the zoning in the city might not allow for it. There's special licenses for that. So if you ever get caught doing like a large operation like that, you're not supposed to technically rent out by the bedroom. A lot of people do it, but you're not supposed to. There's very few actual lodging houses. So, okay, let's keep going. I gotta get through these. My daughter is getting ready to go to bed here. So I'm just gonna blast these questions. Scrolling.
No answers.
There's so many. Noel says, strangely, Mike Russell gains back his health the more he speaks about real estate. That's right. If you do something you're passionate about and you love, which I do love talking about this kind of stuff, it does get you jazzed up. Even though I'm sick, I'm finding the energy. And okay, great information. Thank you. Appreciate that so much. And your question I'll answer. Your t-shirt is white. Why do you use DAZ? My whites don't stay white. Do you use I don't know what DAZ is. This shirt is just newer. Like I've only had it for like a few months, so it just hasn't yellowed yet, I guess. I don't know what my wife uses. We just use regular detergent, I think. So I don't know. Thank you. It's also because we have like a couple of big white bright lights right here probably that are helping illuminate it. I guess it is the same color as this white board here. So I don't know. I guess it is pretty white. Thank you for that. I appreciate it. I don't know what it is that we do to keep it white. Steak and eggs diet, fair enough. We have the closest of species is grills and chimps that eat 75% fruit, 22% nuts, 3% worms and eggs. Yeah, maybe there's something with that. I don't know. Melko Trudno says, did Matt get you on JBP? Yes, Matt did introduce me to JBP. I had seen it before, but I hadn't really watched him in the same, Justin Peterson is who you're talking about. Where you go to research for legislator and our market. So to answer your question, in your municipality, there'll be bylaws posted, so you can go read about the zoning. You can go to the Ontario Building Code to learn about legislation and stuff. Just Google would be a great resource. Yeah, Dan Warren was on 30 Minutes to Wealth show. I did see that. You can't do late rental fee in Ontario. I've been doing that and collected 3 times. Yeah, you can just do prompt payment discount. BR Bo says, thank you. To my current question, Mike, I meant renovation costs. We got that question done. I love joining a stream the second it ends. Sash McFlash, that's a nice name. I like that. I guess it was frozen. We got back on. Now we're all good to go. Let's keep going down. How do you charge for heating in a house with 2 apartments? One apartment is 1,000 square feet, the other is 500. You could basically make them pay the utility heat if you wanted to, like 2/3 and 1/3. If you wanted to do it that way, that would be a fair way to break the heating bill up. Or you just do it all inclusive and increase the rent sufficiently to cover the utilities. How do you negotiate with the sellers if most of the time it is through agents? They don't want to put a lower price since that would reduce commission. Fine. There's still ways with agents. We could do a whole video on that. You can do cover letters to talk directly to the seller. The agents have to give that package, that cover letter, to the seller. So cover letter works for that. You can also talk directly by a lot of private deals, honestly. You find free on MLS too. You just don't use an agent for all the deals. How do you do tenant screening? We talked about that. Where and how do you find people to do your work at amazing prices alongside materials? Darius, you're one of the common people I see in the live stream. So to answer your question as quick as I can, because my daughter's freaking out in the background, I gotta go do bedtime with her. How do you do your work? So to answer your question, I honestly just find cheap trades who want to work for low costs. Honestly, there's a lot of guys out there who are hurting or just want weekend cash or evening jobs, and those guys are fine. shop around. Like just like I can negotiate my interest rates. Someone says, "How do you get a mortgage at 1.49%, 1.5 year fixed?" Back in the day, I got a mortgage that was at 1.99%, 2 year fixed. No, 1.84%, 2 year fixed, and that's like way below prime. Like that's free money at that point, right? When you have a mortgage at 1.84%, and that was on the house that I built, and it's negotiation. I'm a really good negotiator. I'm good at getting people to do things for me for cheaper than, that's just a skill. So I guess learn how to be a good negotiator. That's the key thing. And always get 3 quotes. Never just take the first guy that's there. You pay for what you get. So keep that in mind too. These guys aren't going to always be reliable. You can't, reliability, quality, and affordability are the 3 factors. So I'll give up on reliability a bit. He might not show up on time, might show up a little bit, hungover, but he'll get the job done, quality and affordably. You can only ever have 2 of the 3. How do you do tenant screen? We talked about that. Okay, is there a website or service where 1, I can get insider real estate leads, 2, sell real estate leads? Thank you for your time. Hope you get better. There probably are websites like this, but this is what wholesalers do. They get the thing locked up under contract and they sell that contract to you. The right to buy this house, sign on a contract for $5,000, $10,000. So you'd be a wholesaler if you were doing that effectively. There should be a website. It just sells information, but I don't know. I guess you got to lock up under contract. Then you use that information. Now you have a deal in your hand, so you can actually sell something physical. What percent of income? It's hard to sell information too, right? How do you know if it's going to lead to an actual close, right? So better just to use that information, close on it, and then give that away. Okay. What percent of income were you living off before you quit your day job? But right before I quit my day job, 0. I was living on nothing of my day job. I was saving 100% of every dollar my wife and I earned. We lived on our rental properties. In the beginning, 19% of our income. We were house hacking. So our cost to live was less than $1,000 a month because I had roommates covering the cost of the house I was living in. So transportation, eating out, everything, all of our whole spending was less than 15% of what we brought in. And I didn't make that much. I made 50 grand a year, 55, 60 were my base salary amounts. And, and my wife made like 35,000, 38,000. So not a ton, but we were able to save like 80, 90%. That's the key, right? Is spending less and earning more. So I was trying to earn as much as I could. And the bigger that gap, the faster your earn more goes, right? Like if you have a gap between what you're spending and what you're earning, all that difference goes into investing. And investing grows your top, right? You get investment income. And so you just get a huge gap because you keep your spending the same, but you keep earning more. You don't buy a new car, you don't buy a new house, you just keep it the same, you just keep getting richer, and the gap grows and you keep getting richer faster. So it's actually exponential. You get exponentially richer, and that's how it works. Sorry, typing out renovation cost. Okay, how much higher should be over all experiences in order to qualify for the next one? So I think you mean expenses. Yeah, okay, I just misread that, I'm tired. I look for like a 2.5 multiple of the mortgage. Sort of like, double the expenses is like a minimum. Gotta have a decent amount of cash flow. Look for 30% return on your investment, I guess is another one too. Yeah, I mean, that doesn't sound terrible. That seeing here, if you get a bit better price tag or rocks on that, that would be great. Yeah, I mean, it'd be better if there was a bit more juice there, like 30,000 in income would be better to answer your question there. Thanks a lot for answering my question. Cleared up what I need to know. Awesome. I love that. Mike the Fire. Pro tips. Mind blown. Thanks. Appreciate that. Please write an ebook. I'll pay for it. Darius, I'm going to write two ebooks. I'll write a few ebooks for you guys just because it'd be cool. By the way, once we get monetized, this will eventually happen. I'll be able to get super chats, and like I may actually just like pay friends of mine like $5 to super chat me like $5 back. Just because I think that'd be so cool to have like money coming in through a live stream. So I may just do that. But if you guys want to like do that once I monetize, that'd be really cool to do a super chat. Jason, I know I can't believe it. My daughter is having a freak out in the background, so I really need to go.
There's not many questions left.
Yeah, I need to monetize the channel so I can send you money. Or you want me to monetize it so you can send money. Price matching on debt, that's right. Yep, not enough for super chat. Sub, that is. How much money is a good amount to start in real estate investing? Thanks again, man. Keep up the great work. So you guys share this, and if you guys go and just put it on your computer and let my videos run on playlist, you will get my watch time hours up. I think I'm 800 or 700 hours away now at this point. So if like there's like 22 people in here, if all 20 of you guys put on my videos for like a week, like or for even a day, just let it run for 24 hours, that would jump huge, right? 20 times 20 is 400. That would give me half the way there. So maybe do that. I'm not saying you should do that, but you could do that. That'd be cool. How much money is a good amount to start real estate investing? Enough to get a deal locked up, I guess. So 20% down ideally would be the ideal amount to start investing. So 20% of the purchase price. Thanks, guys. I'm gonna blast through a bunch of your content tonight. Is there a good starting point video? Sash McFlash. I don't know if there's a good starting point. I guess the snowball one is a great one, where I talk about buying how anyone can buy 10 properties in 3 years. That's a good one. Yeah, there are a lot of good videos in there. Just go through and see what you like. Look at the titles of the videos and kind of go from there. There's some good videos in there. The credit score video is decent as well. I like all of my videos. I wouldn't have made them if I didn't think there was value for the world. So I'd say watch them all because they all have value that can help you in some way. Praying for your health. Keep up the awesome work. Thank you, Darius. I really appreciate that. I do need to get my health back up. Sash McFlash is eventually only be answering super chat questions. That'd be so cool. That would be so cool. That's right, Mr. Beefy. I need to put my daughter to bed. I'll see you guys next week. Gonna leave your videos running 24 hours. Yes, please do. And guys, as always, if you stayed this long, thanks everyone, Tommy. Thanks for staying on, and all you guys who stayed on, the 20 people who stayed on for this. If you found value here, as always, please like and share it on Facebook or Instagram or wherever you are on social media, sharing that so someone else can get value from it too, and we can grow this and have basically a cross-pollination of information, where even people are sending me information through these streams where I'm learning things that I didn't know before too, because I like to learn. Anyway, guys, if you enjoy this and you're still watching at 102 minutes in, please leave a comment below. After you like this video, after you smash that subscribe button, and then you click that notification bell to know when I'm putting up videos again, please leave a comment now down once the video is done and say, hey, Mike, thanks so much for doing this live stream, or whatever you're gonna say. Add another question in there and that sort of thing. And then basically just say, cheers, everyone. Thanks so much, everyone, for joining.